Hello to all future chartered accountants, cost accountants, company secretaries, accountants, and bookkeepers. Welcome back to my channel. Okay, now imagine a busy store with hundreds of sales, hundreds of purchases, and many cash transactions every single day. Now, recording all these transactions in one big book will become very messy, right? It will be very chaotic and very messy. Very bulky book will be prepared, so it's very difficult to manage it, right? Well, thankfully accounting has a smarter way. We have something called the subsidiary book or a special journal, or it's also called day books. Now these are lifesavers for organizing transactions efficiently. So today what we are gonna do is break down what they are, the different types of subsidiary books, and see exactly how entries are made. Okay, now you understood what is a subsidiary book. They are also called books of original entry, just like the journal. Okay, but each subsidiary book is a specialized book to record one specific type of transaction. Now for example, think of them as specialized diaries. So instead of one diary for every transaction, for everything, you have a special diary for, say, cash transactions. You have a special diary for credit transactions. You have a special diary for, say, purchase, special diary for credit, and so on. Okay, now why do we use them? Why do we basically use subsidiary books? Because if we maintain only one book, we'll create a lot of messy problem for ourselves. Okay, now creating journal and special books or subsidiary books basically helps us and allows us for division of work, where different people can handle different books into different departments. We have different departments. There is a sales department, there is a purchase department. So this will help that. Speed and efficiency, recording and posting will become faster, much easier. Okay, if you also want to, say, quickly find total credit sales or total purchases for a period, subsidiary books will help them. Okay, let's actually look at the main types of special journals or subsidiary books. These are the common subsidiary books which are used: cash book, purchase book, sales book, purchase returns book, sales return book, bills receivable and bills payable book, finally journal proper. Let's actually go through each one. Okay, now cash book. Cash book basically is the king of cash. All your cash receipts, call payments, cash payments, and usually also the bank transactions all are recorded here. This basically acts cleverly both like a journal and ledger account. Okay, and generally cash book can be of two types. Three types: single column, double column, and triple column. In single column we will only have cash book. Okay, there are certain organizations who maintain two different books. Single column books, cash book will be separate, bank book will be separate. If they have many transactions, even to avoid a lot of mess, they can maintain two different books, cash book and bank book, but they both fall under one category. Okay, many organizations, they maintain double column book, where you have two columns, one for cash, one for bank, in same book. Or if certain organizations say they have a lot of discounts, okay, then they maintain a triple column book, where cash, bank, as well as discount column will appear. Okay, single column only amount, double column it could be cash and bank only amounts, or it can also be cash and discount. Okay, third, cash, bank, and discount all in one, that is three column cash book. Okay, now let's go for the purchase book. Now in purchase book there is only credit purchase. Okay, credit book purchase book is only used. The main purpose is only to record credit purchase of goods. Okay, not of any assets, only of the goods. Now goods means the items with the business buys for either resale or for manufacturing. Only those goods are recorded. Purchase of assets are not recorded in purchase books. They'll go into journal proper. And cash purchases go in cash book, not in purchase book. In purchase book only credit purchases are recorded. This is how a purchase book will look like. Date, particulars, that is the supplier name, invoice number, ledger folio, and the amount. Okay, let's actually record a credit purchase. See how it is recorded. Okay, in the transaction, if the transaction is say purchased goods on credit from supplier A for 5,000, void invoice 123. Now the invoice is generated by the opposite party. If I am purchasing a good, they will actually give me an invoice. That is the invoice number which we record here. How will we entry? If you look at it, how will you entry? The date column, you will write the date. In the particular column, you'll write the supplier's name. Okay, supplier's name. Invoice number is the invoice number on the bill. Ledger folio. Okay, and then the amount, the total amount. Okay, now posting from here basically goes to that particular supplier account. So instead of posting from journal, okay, we can generally post directly from purchase book. Okay, purchase account is debited and individual amount is credited. Okay, we'll discuss about these entries on a later part. Now, similarly for sales book. In a sales book, only credit sales of goods are recorded. Cash sales are not recorded. Sales of assets are not recorded. Okay, cash sales will go to cash book. Sales of assets will basically go to journal proper. Look at the columns, how the book looks. Date, particulars, invoice number, ledger folio, amount. Okay, now same. An example of an entry. Sold goods on credit to customer X for 8,000. Void invoice number 501. This is the invoice we are creating. We create an invoice, we give it to the customer. Okay, now in entry will be January 15th. Date, supplier name, customer X, invoice number, LF, ledger folio. When this is posted to ledger, that ledger folio number, page number has to be written here, and amount. Once it is transferred, ledger folio number will be written. Okay, now periodically the total of sales book is credited. What happens is, we write in a day, we write only one book in the ledger, one entry in the ledger. For example, today we made say 5 sales, credit sales. Total amount of sales is say 50,000. So periodically what we do is, we only credit 50,000 sales, and in party account, in ledgers, in party account, customer X, customer Y, customer say, we write individual entries. Individual amounts are debited there. Only one sale entry and individual entries will be debited there. Okay, we'll explain this later on when we write, when we post these entries, sales entries into ledger account. Similarly, we have bills of exchange. Okay, we'll have purchase return, sales return will be similar accounts. Similarly, the way we did for purchase account, the way we did for sales account, exactly same pattern will be for purchase return and sales return. Bills of exchange. Now we'll have bills receivable account and bills payable book. In bills receivable book, we record all details of all bills received from customers, debtors. Okay, it could be drawer, it could be dry, okay, amount, due dates, etc. Everything will be recorded in bills receivable book. They track details of bills receivable, bills payable. All bills accepted and issued to suppliers are bills payable. Okay, so when supplier basically gives us for credit, we purchased a good for credit, a bills payable will be there. We'll record these in bills payable. Okay, these basically helps track of due dates to be received from customer, also amounts for bills due dates to be paid to the suppliers. All this will be there in bills receivable, bills payable. Okay, now the last one is journal proper, the catch-all book. Okay, now whatever cannot be entered in these small in these 7 books will be entered in the journal proper. The purpose basically is to record all transactions which do not fall under any other books. Examples are opening entries, closing entries. In our last video we uh, we uh, we posted certain entries: balance carried forward, balance brought down. Those entries are entered here in the journal proper. Rectification entries, if there were an entry is already made and if we want to rectify it again, okay, and rectify entry, we don't use a whitener, we don't rub it, no, we actually enter a rectification entry. They fall here. Adjustment entries like depreciation, etc. Credit and credit purchase or sale of assets, not goods, they fall here. Bad debts, they actually come here in journal proper. These type of entries which do not fall in any other books will fall in journal book. Okay, now what are the advantages of subsidiary books? As already mentioned, the advantages are very very huge. It helps division of labor, it helps efficiency and speed. Specialization of books are done because it helps in basically give us specific information of specific transaction. If I want to know more about credit, total number of sales, how much total sales happened this month, sales book will be used. How much total purchases happened, purchase book will be used. Okay, similarly easier posting are done very easily. Okay, error detection, we can actually detect errors faster, and we can also get detailed information of any specific entries. Okay, now let's recap. In summary, subsidiary books are specialized journals that classify and record numerous similar transactions like credit purchases, credit sales, cash transactions, and returns. They make bookkeeping much more organized and efficient than relying on just one journal. Okay, understanding which transaction basically goes into which book is very very key, is very important. Okay, now did this actually help you understand the subsidiary books better? Which books for you seems more interesting? Let me know in the comments. And if you find this video useful, please like it, subscribe for more accounting basics. I'll try to explain them more simply, and hit that notification bell. Thanks for watching.